Hi, I'm Victor. In this video, I wanted to go over the dividend stocks that are in my portfolio and give you a review of the best dividend stocks overall and the best dividend stocks to have during a recession. Today is May 30th, 2022. It is Memorial Day here in the United States. And I first wanted to remember all those who have fallen defending our country and defending all the rights and privileges that we have in this great country. Thank you. Thank you to all servicemen and women for serving in the military here in the US. Now, let me get into dividend stocks. Dividend stocks are really good to hold currently. We have started to go into a recession. 2022 has really proved to be a year where growth stocks, tech stocks are really being punished, and really good old-fashioned, boring stocks that make money, make things, make profit, and create free cash flow and pay dividends are really desirable. So let me tell you more about that. So the S&P 500 is down for the year. It's down about 14%, but I wanted to show the 5-year and kind of show where we're at with regard to the downturn in stock prices and the economy and so forth. Here's the last 5 years. From the beginning of the year to this point, we saw a really nice rally last week that picked up the stock market, over 4% overall, which is great. But still, we're down 14%, and very quickly this can go down. We can go down further. So it's a really good year to think defensively and think long term. So I wanted to share with you my top dividend stocks overall, and then the best dividend stocks that I believe are good to hold for a recession. So here's my stocks that are dividend stocks, from the stock that pays the highest dividend rate to not quite the lowest. I had to cut it off at the top 20. I think I have more than that. But here are the top 20 in my portfolio. The very best one is a mining company, BHP. They're headquartered in Australia. They mine iron ore, copper. They also have a petroleum exploration part of the company. And this company has been very profitable because commodity prices really went up in value. So these guys have paid a very high dividend rate. It's a combination of this stock isn't priced up to the level that it can be. I mean, I believe it's 62% undervalued. This column here represents what discount I expect to get on these stocks. But they pay an 8.48% dividend. So a very attractive dividend. The second dividend stock listed is Big Five. It's a retailer. This is classified as a specialty / discount retailer. And I really like Big Five. I've owned them for years, and they make a lot of money. They make profit and they generate great free cash flow. I have a full video on both BHP and Big Five in my channel if you want to view those. But right now, Big Five pays 7.5% dividend. So this is a profitable company that is doing well, that pays you 7.5% dividend, just a great dividend. Carefree Trust is a REIT, real estate investment trust, that focuses on elderly care. So when people get, very high age and they need a place to live, Carefree Trust is where they can live. They pay a very high dividend. I think it's a really good company to own because we have a lot of people getting old, a lot of people needing to live in a place that Care Trust can provide. Number 4 is another mining company like BHP. It's called Terninium, and they operate mostly in Mexico and provide a lot of the iron ore and essentially the steel materials that are used in the manufacturing of cars, appliances, and so forth. And their geographic proximity to the US really gives them a very good market to sell into. Very high dividend and so forth. So you can see that there's a lot of good dividend stocks that I own. I did 2 things. On the very left here, I showed arrows, and year to date, green arrows mean the stock price is up. Red arrows mean stock price is down. And then the equals means they're relatively flat. Now, bad news to some is good news to others. if you're looking at like for example, a big five, stock price is down, that makes the dividend rate even more attractive because you're getting a discount on the stock price and you can buy into the stock and get an even higher dividend rate. So it's a pretty attractive proposition to me, the big five proposition, where I can buy more shares. I believe it's very undervalued. They're profitable, generating great free cash. They'll never go out of business because they have a great balance sheet. So I really like investing in companies where I feel like over the long haul, I'm going to do just great. I'm going to get paid a high dividend, and eventually the market will realize the big five is worth far more. And you can go down the list and see others like Hanes Brands. We are all going to need Hanes Brands, undergarments, shirts, apparel, and they're not the type that makes fancy, apparel. They make the, good affordable stuff that we would find at a Costco or a typical department store. So I believe HBI is more like a consumer slash discretionary slash necessity kind of company. And what I did is I looked at, which stocks were down, which stocks were up, and BHP's up because commodity prices are up. AT&T is up, which is good to see. That's a really solid communications company. Panel is a logistics company. They do shipping and freight. But I also recognize that some of these, this little symbol means cyclical. They're enjoying cyclical trends that benefit them. For example, Panel. Right now, the supply chain issues that exist in the global economy pay shipping companies like Panel a premium to use their shipping vessels and get products and materials from one continent to the other. Therefore, Pengay makes a lot of money. They're making tons of money and they're paying a very high dividend rate. And their stock has appreciated greatly. I'm up like 60% on Panel. So it just it's a great situation for them, but it's cyclical. I think as the supply chain issues subside, the demand for Panel will also subside and they'll go back to more normal profits, free cash flow, and maybe their dividend might go down. Other cyclical companies I'll point out, Ford. I'm a big believer in Ford. I think they have a very good catalog or product line. Their F-150 Lightning, I believe they made their first delivery either on Friday or today. And I think that's going to be a big winner. And the rest of their lineup looks really good. Well, they pay a really nice dividend, but I consider them also cyclical. If the economy goes bad, people wait to buy a car. So I think the cyclical nature of their industry is going to catch up with them. And I have to label them as a cyclical company. So that's my top 20 overall dividend stocks. Now I've got my top dividend stocks that are really good during a recession. So I really, I'm listing all the stocks in my portfolio that I think are going to do just fine during this recession. And let me go over those. So you see some of the companies I showed earlier, like Care Trust. Again, as people get older, it doesn't matter if we're in a recession or a growth period. If they get to a certain age, they need to move into a managed care, facility or, a facility where they can get nursing services. They'll have to do it. And they probably saved up, their whole lifetime to be able to do that. But moving down the list, you could see AbbVie is more of a pharmaceutical company. And again, pharmaceuticals are needed, whether we're in a recession or not. Another drug company, Pfizer. I'm hearing that COVID is going to end up being an endemic, similar to the flu. The flu didn't exist before the 1918 flu epidemic, and it's here. It stayed with us. So every year we get a flu shot. Well, Pfizer created their vaccine, and I believe they're going to have somewhat of an ongoing business because we're going to have boosters every year if you want to have the antibodies to defend yourself against COVID. So you have Organon, which is a women's health, products company, CVS, pharmaceuticals, food companies, Tyson, Archer, Kroger, and then a healthcare company. So these are all solid in recession industries. And you notice how many green arrows we got, almost all green arrows. These have been very popular in 2022. In fact, the food companies have been so popular that their dividend rate is lower. And it's lower because their stock price is up. I'm up quite a bit on Kroger and Tyson. And, when I first started investing in them, Tyson was like at a 4% dividend, but their stock price is up so much that that's made the dividend rate lower. So I'll take the gain on the stock price any day. It's great to see that. These are very popular. They'll be very resist or stable during a recession. And you'll see moderate gains in these stocks. They'll continue to go up, but I think the gains might be already baked into these stocks because a lot of people have moved into them already. I think CareTrust has some upward potential. I think AT&T has upward potential, and so does Prudential. So as I do planning for my portfolio, I want to have a short-term horizon and a long-term horizon. My short-term horizon really, I have my needs, the risks that I see there, and then the opportunities that exist. And my needs are around, income that I need to support my family, support myself. I want stability, dependability. I don't want any, big surprises that could lead to a lot of stress. So those are my needs short-term, is to, hey, let's live well and make sure that we have, bills paid, plenty of healthy food, and a little bit left over to have a little fun. The risk, short term, stocks could fall. Now, if stocks fall, the right stocks, you can buy into them further because they'll pay an even better dividend rate. But those are the risks that are out there. So we got to be conscientious about the fact that, hey, 2022 has been a down year. We can see even further down movements in the stock market. So let's try to erode that risk. Bad news on companies can dramatically lower the long-term value of a stock. And I don't care how high a dividend rate is. If, let's say, a stock goes to 50% loss on the stock price, it's going to take a lot of dividend years to make up that loss. So continue to do our homework on these companies is really, really important. I have to stick to it every month. I have to touch every company that I own. The other risk is if you focus too much on short term, you compromise or limit long-term big gains. And, I'm getting older, but I still have, 20, 30 years of investing left. I really want to take care of my short-term needs, but I also want to bet big on the best companies. I want to bet big on companies that are going to deliver over the next 10 years. So make sure that we don't have too much short-term horizon focus, have a good balance, make sure the next 2-3 years, there isn't going to be any issue with taking care of, my family, but let's make sure we don't go overboard and end up with a very short-term oriented portfolio. The opportunities, it's always an opportunity to outstudy the rest of the market, I guess, and be a good, qualified, informed investor. The best investment you can make in a particular company is your time and diligence. So that's the first opportunity. And second is you can invest right now, especially in some companies that I listed like CTRE or even AT&T. These dividend stocks are being sold at a discount currently. You can buy into them and get a very good dividend rate. And you can reinvest those dividends so you can have long-term appreciation as well. Now, long-term, currently I listed on my top 20 overall stocks. You saw that there was some red arrows. I think there's some big returns available in those dividend stocks, especially those cyclicals. Nobody knows exactly what the economy is going to do. And if you have enough diversification, some of those stocks are really going to deliver great gains. The commodity companies, those mining companies, they've just been fabulous to own. They deliver great gains on the stock price and pay a great dividend. Chevron, and I owned Exxon for a long time. They delivered wonderful stock price appreciation while paying a great dividend. It was like the best of both worlds. So those big gains, that's why I want to own Chevron. That's why I want to own these significant companies, because the cyclical industries, nobody can tell you exactly what's going to happen to oil. As an example, we're at $114, per barrel. It may stay there for another year, 2 years, who knows, it may go up. It's gone up as high as like nearly $200 per barrel about 15 years ago. But it's good to have my money in the market, producing really good returns in the long term. So keeping that long-term focus. The goal is to double my portfolio every 5 years. That's the goal. And I need to continue to really do my homework to assess that I'm on the right course to really achieve those types of returns. The risk that exists, is stock prices could really underperform over the next 3 years. You can have certain stocks that go down very fast. Example, Netflix. Example, Meta, Facebook. Facebook went down significantly. And in that stock, it's one of my biggest positions. I believe in that company. I think it's going to be worth much, much more over the next 10 years. But near term, over the last 12 months, I'm down 30% on that stock. So not fun to be in that position, but those things happen, and that's a risk. A fundamental change of the economy can happen. Similar to oil, where you've seen an oil price of $114 per barrel. It's been there for a while. A change in the economy 2 years ago during COVID, oil prices were at $30 a barrel. So oil companies were really unprofitable. And those changes could happen very quickly. So we got to do our homework to see if that's being telegraphed, we get some of our capital out of harm's way and into the right areas of the economy. And then there's another risk of staying on the path too long. And 20 years ago, I was probably the type that would put money to work and kind of leave it there, and maybe leave it there too long. And I'm not that investor anymore. I'm an active value investor. So I have to constantly bet on my own analysis, constantly bet on myself, as opposed to leaving money in certain sectors too long. And hopefully that makes sense that, hey, I hear a lot of talk online with channels and I understand it. Some people are like, hey, I don't care if the stock goes up or down. I'm going to own that stock for the next, 20 years or 30 years or forever. Well, I think it's something to say, but I just can't buy into that completely. Even Warren Buffett sells some of his stocks that he invested in and gets out of them after maybe a couple of years, after 5 years, because he realizes, hey, it's not the company that I thought it was, or the economy changed, or something changed fundamentally and you need to get out of it. There's really good opportunities right now for long-term gains. I think that a lot of profitable cash flowing companies are discounted heavily. So it's a really good time for me to invest. It's a really good time to buy more shares in companies that I really believe in. And I want to buy into the companies that have the best ideas, and I believe are going to be the leaders in their respective industries. I want to keep the winners and sell the money-losing stocks. As soon as I realize that, hey, that stock, it's not the right one anymore, or that company, CEO got let go, there's really confusion in the leadership. That's the kind of thing that, if I can't understand it and understand it where I could have a sense of what the company is going to do over the next, 12 to 24 months, I need to take it out of my portfolio. I don't want to have a loser in my portfolio too long. Not expecting it to be perfect. I might have a stock that goes down, surprises me a little bit. But fundamentally, if I find that there's an issue with a stock, I got to act on it. Well, thank you so much for watching my video. Just want to remind you, this video is for entertainment purposes only. I'm not recommending you buy or sell any of the stocks I covered. I just wanted to share with you the portfolio of dividend stocks that I have and what I'm doing. And hopefully you found it interesting. Do me a big favor and like my video. It helps my channel. If you like the content, consider subscribing. Overall, enjoy Memorial Day weekend and good luck investing in 2022.